Alrighty, guys, welcome to tonight's charting session. Hopefully, everybody's doing well. Happy Monday. Hopefully, everybody enjoyed their weekend and started the week off well today. We did do pretty well. I took 2 trades today. One in the morning ended up being break even, and then I took one long later in the PM. Ended up working out really nicely. I'm up around 3,500 on the day. I actually started a new eval too on the side, just for fun, just to pass it and add it to the arsenal. I actually haven't been trading on Fundeds at all recently, just my main account. So I loaded one up just to try it and get it passed, see how fast I can do it. So I'm up I think I'm max profit on that today. So we'll see how that ends up going. I'll keep you guys updated on that one. But I also want to do a funded account challenge in the future with you guys, and try to get everybody funded as well and take the same trade. So we'll probably end up planning to do that soon as well. But let's take a look at the buys going into the day, also in the what trades we took. So going into the day, I was very bearish going into the morning, but I was bullish overall in the day, right? Because the external draw, like we talked about in the Sunday session, is still higher. The 4-hour ended up rebalancing lower. We bounced off that order block and back in equilibrium of the previous range, right? So we had this initial move. We now retraced back to equilibrium of that range, bounced off the order block, had displacement, right? Now we expect us to go most likely back to that buy side level. So going into the morning, I wanted to see a bearish move, and the reason I was bearish is because we had all of this generated sell side going into the morning, right? Looking at the 5-minute, we had a really, really nice sell model here. We came back up, took the previous session high, rejected off of this 5-minute fair value gap. Again, also retracing back to OTE of the previous range. And keep in mind, there's a reason for us to go lower here because we're not yet in discount of this range, right? So we had this previous price like that we ended up creating on Friday where we just continue to run here, and we had to have pretty much like a really big imbalance here, also a little bit of an order block, but it wasn't super clean. So I expected price to most likely retrace back to equilibrium of this range. But in the morning, I was expecting these lows here to be the draw on liquidity. So we ended up coming up, taking that buy side level. This was the AM soup. So we ended up coming up, right? Again, once we're above this buy side level, once this taken, I'm expecting and I'm watching to see some form of manipulation. So we're waiting. Finally, these equal highs get taken, and this becomes the soup, SMT at the highs. And then we start to sell back off into the range. Anybody take an initial short in this area in the morning? Possibly targeting this recent low too. You're almost, yes, nice. Yeah, this was really nice. This was the AM session, the soup, right? Expecting manipulation up here, waiting for displacement, waiting for the fair value gap. We ended up selling back off into the range. So now at market open, I was very, very patient. Now I was bearish going into the morning, but I wanted to see this get respected because I didn't know if we wanted to run through this to maybe go form another SMT at this high. So I was really just waiting for displacement is all I was waiting for. So again, my bias going into the morning is bearish. I want to see all these equal lows get taken, but I need to see the validation of doing so, right? This move here kind of shows us we want to start doing so because this on the bigger time frame was the first move that we really started to get displacement to the downside after that buy side level was taken. So this is buy side swept. Displacement, this becomes my market structure shift. We pull back to OTE of the range. I would have really liked another SMT here. That would have been really clean to see. But this is when I ended up zooming in, and I wanted to see what opportunity might have been giving here. So I was zooming in, and I waited for the rejection. Again, we're chopping. Once we got this displacement move, I took a short after we rejected this 15-second fair value gap. Took a short. My first PT was this recent low. And the reason I put my stop to break even here, and I think the mistake I made, and now I wouldn't really say it was a mistake, but one thing that I want to take out of this trade, again, we're constantly looking to improve. I did what I should have, but also no at the same time. And I think what the problem was is I failed to recognize how bearish the bigger model looked like. Now, what I did right is I feel like I managed this fine because a lot of it was I just didn't like the efficiency in price. We came up, rejected this. At this point in time, I want to see a dump. I don't want to see us hesitate. So this is my first PT here. We were pretty much a tick off of tapping that. And at this point in time, I was like, I might as well just move my stop to break even here because we're most likely going to come back up, retrace just because of how slow the efficiency to move price higher is. So my initial stop was, I think, somewhere up here. And then I moved it to break even once we rejected, once we started to sell, because I didn't want to see us come back to here. So we ended up coming back, taking this high, and this ended up being the soup. right? We ended up coming back. NQ took this high. ES did not, retracing back into the imbalance. Again, these lows were never taken. And then right after taking that high, right, stopping out all of those traders that were initially short in the morning, then we started that continuation move, retraced again one more time, and then finally continuing lower. So again, the 5-minute model ended up playing out beautifully like we expected it to, right? We could have just been too zoomed in today. Now, I do think that that was the case with this model. If you were zoomed out and you were trading the bigger time frame model, you would have had more risk on the table, more risk in favor of ticks wise if you're going to be trading the bigger model, and that's why I wanted to overlap it. So honestly, I'm fine with getting stopped out, and the reason why I say that is because the way that I've developed my trading is I've gotten to a point where I'm so picky about my risk that when I lose nothing, if not super small amounts, because I know how to position myself in favor of protecting myself. So even if the setup looks great, I'm totally fine with having a super tight stop or trying to position myself or getting stopped at break even, whatever it is, and it then going in my favor, because I know that the times where I'm wrong and it doesn't go in my favor, I'm giving back all of those profits that I've been building, right? And when the time comes where I do get the best setup I want to see and price action is efficient and the markets are aligning, the internal model and the external model are aligning, and well, again, like the second trade that we took later in the day, which we'll go over, it gives me the opportunity to have tight risk, but when I win and price runs and what I'm expecting it to be, I win 10x of what I normally expect to lose because I can position myself to do so. So this is one of those trades where, yes, could I have had a looser stop and this would have worked? Absolutely. And I think the bigger time frame model still ended up playing out. So it all comes down to who you are as a trader. I know people that probably took this model today that shorted on the 5-minute and rode this all the way down. Who took this on a 5-minute model, shorted, and rode this all the way down to sell side? I know at least somebody did. Did any of you guys take this short? I did. All right, there's somebody. I did. Another 2 people. And this is not a bad short at all because, again, the model is fractal. This is exactly what we would look to see on any other time frame. But the problem was the internal time frame was just a little bit slower going into the AM session, and I was trading the 15-second and the 30-second going into the morning. Now, again, nothing invalidated this model. Nothing invalidated this model whatsoever. So me reviewing this and going back and saying, okay, I got stopped on this. What were the right things and what were the wrong things I did? Number one, I think the wrong things I did was I didn't position myself in favor of what the model was showing me. And what I mean by that is the model in which I was recognizing was on the 5-minute. So I shouldn't be super dialed in on the 15-second and the 30-second. If I am going to be zoomed in, I want to be more focused on the 1-minute. And you can see if I was more focused on the 1-minute, the only opportunity is here because this is the only imbalance that ends up getting created. So if I entered in here, my initial short in this 1-minute fair value gap, and I put my stop here, I would have never gotten stopped out, right? So I think it was just in favor and in relationship to the model on the bigger time frame that allowed me, right? So what did I do right? I positioned myself accordingly. I didn't over leverage. You know, I was patient with it. I had conviction in the setup. Again, the model is exactly what I would trade any other day. I think the problem was just I was maybe a little bit too zoomed in. Again, even though I was a tick off of getting my price target on the first tick, I think I could have just given this more room because there was nothing, again, there's nothing that invalidated this model. It was just failing to position myself in accordingly on the bigger time frame, right? So that's one thing that I wanted to cover, right? It's recognizing what time frame the model we're in, and if I am going to look at the lower time frame to take an entry, I have to make sure that it's in according to the bigger time frame, that even if I get stopped, it has to invalidate the bias, right? And what's better about this 1-minute is if this fair value gap gets ran through, this most likely invalidates the model because we'll most likely continue higher to this high. So on the 15-second, that doesn't do that, right? I set my stop in a point in time where I could get stopped out and we could continue lower, which there are times when that's fine to do, right? There's times in which that's fine to do. So that's why I want this is a kind of a trade where it's like I'm not super upset about it. I'm not crazy happy about it. It's just kind of one of those trades where I think it was great. I think it was fine. Nothing really super bad that was done. Nothing super great that was done. I think it's just another trade added to the arsenal, another experience that I can learn from and continue to journal. And again, to me, this is just another instance of building conviction. This is exactly what we expected to see going in the morning anyway. The model ended up playing out. Right now, it's just going back, journaling and figuring out, okay, how was the execution? How can we fix the execution a little bit, right? So that was the break-even trade I ended up taking in the morning. Model ended up playing out beautifully. After this, we ended up continuing to sell all throughout the morning. And at this point in time, I do not care to touch the market. I do not care to touch the market. This is where people start to get angsty. They start to jump because they see, oh my God, we're dumping. Oh my God, we're dumping. I want to catch a move. I want to catch a continuation. But me, when I look at this market, this doesn't tell me anything. I don't know we want to bounce. I don't know we want to go lower because, again, on the bigger time frame, we have a bullish bias. So this tells me this move is most likely going to become a rebalance on the bigger time frame. Again, how we retrace back to OTE of the previous price leg before continuing back higher. But what I didn't like is this displacement. It was just a straight down, straight up move. And there's nothing here, in my opinion, that validates what structure wants to do. Now, I know a lot of you guys took a long here. I want to say why I do not take longs here and why I don't take longs in this market. The question I have for you, and this is the way I want to explain this. Somebody's experience with whatever they see in life, and this primarily, again, this is what I want to relate to this trading and how I want to explain it. Any experience that you have that repeats always is watched and based off of how that experience correlates to some other experience. When I go into a market and I see something like this, I know that this is not what experience or the price action that is built my conviction with what I expect to see. So even if I can find something even if I can find a way to squeak in like price action, be like, oh, this looks like a breaker, this looks like this. If it doesn't feel or I know what price wants to do, there's no recognition of why I should take it. And what I want to explain to you guys is most times in price action, price will not look like this. So now I'm not saying this is building bad habits. But in my personal edge for me to take this kind of trade is building bad habits. And the reason I say that is because price will not always act like this. Price will not always go straight down and then straight back up. So at a time where I normally would expect a long, again, think about it this. If we ended up taking a long today right here and price ended up doing this right after it, right? What happens if we take a long right here? Again, there was an SMT at this high. Let's take a long, and then price ends up doing this right after. I would have taken a long and been like, oh my God, Justin, that long was so early. Why did I take this? And if you guys took a long on this too, you would go back and say, oh, this long was too early. Why did I take this? There wasn't enough structure. So this is one of those instances where I don't have conviction with this because it's at a point in time where I know that I could easily enter a trade here and say, guess what? There wasn't enough structure for this because I don't expect most of the time to see a straight down, straight up move. So why should I go into a trade expecting to see that when I know most of the time that doesn't happen, right? So that's where my head's at when taking a trade like this because I don't expect to see price action that doesn't normally happen. If I'm going to set myself up for a trade or I have a conviction or an idea in a trade, it better be in a circumstance where I know it's going to be I've seen it happen many, many times before, and it's more probable for it to happen than not. And this is a point of instance where I thought it was more probable that we don't go straight up. So, in my opinion, this is a conviction destroyer market because the people that try to build conviction trading this kind of model, in my opinion, end up getting hurt in the long run because this doesn't look like this most of the time. It won't look like this most of the time. It won't look just straight down and straight up on the bigger time frame. It will have more structure, validating and showing a cleaner manipulation, showing a clearer consolidative phase, and showing a clear example of when distribution is going to happen. Today, that wasn't clear. So for me to have taken a trade when it wasn't clear what I normally would expect to see in price, it goes against what I'm already looking for in price. Even if there's a way to find an entry, like saying, oh, this might have been this, and this might have been an order block, this might have been break a structure, whatever it is, it didn't look like it in relationship to what I normally expect to see. And that's the reason why I didn't take it, right? So what I want you guys to understand about this kind of trade is there will always be times in the market where you can see price action form in a way in which you don't normally see it happen. And what I want you to recognize is the times in which that does happen, you have to make sure that you're able to recognize if you are getting lucky or you are taking a bad setup or you're taking a good setup. It always depends because you might come into a day, think that you took a good setup, end up winning, and then in reality, that was a terrible setup, right? And so my goal and what I want you guys to focus on is when you are journaling, I want you to see how similar some of your trades look, how similar some of them look, how different do some of them look. And I want you guys to finally finalize and start to dial in on that one thing that you know you love, and that is the most consistent trade that you are looking for in the most consistent model, and the way that you see it happen over and over and over again. For me, again, it might be for you, which is completely fine, but for me, in which I expect to see and in which I expect to trade, it doesn't look like this. Now, why do I like trades up here way, way better than here? Because once this gets ran through, this fair value gap, and we get back above premium and we continue to show bullish structure, I know the drawn liquidity is here because my bias going into the day was already bullish. But down here, I just don't have the conviction to take it. Once this imbalance gets ran through, I know we're going to have another accumulative phase before finally having a push up. So I'm looking for the second stage manipulation. Second stage manipulation, now I can recognize, okay, even if this doesn't look like a clean buy model, in my opinion, this doesn't look like a clean buy model at all because it's straight down, straight up. But in a buy model, I expect a second stage redistribution or reaccumulation and then another stage manipulation. So that's exactly what I was looking for. Now, I took 3 entries here, 3 entries, all with 2 contracts, added 2, added 2, added 2. And basically my goal for this is once we got above this fair value gap, I've seen it happen many, many times. Again, I have more conviction trading here than I do here because I've seen this happen many, many times. I haven't seen this happen many, many times, right? Because many times down here, we'll fail to go higher, generate more buy side before continuing lower. Once we get up here, I know we're going to these equal highs, right? So now I'm looking to see in price what I want to see. So the way that I entered this is once we're back up in this range, I'm pretty confident. And you guys might say, Justin, why didn't you alert these initial entries? The reason I didn't alert these initial entries is because these initial entries were not an A+ setup to enter. These were scaling into a position to set myself up for better risk. And when I did alert the trade was when the best entry was for you guys to take based off of structure, which was the A+ setup. But I position myself so I could scale in and then wait for the best entry to add the rest of my position so I could have lower risk. And that just comes with experience. And we'll talk about why I did that. So when I'm looking at this action and we start to go, oh, retrace back lower, retrace back up, we take this high here. No displacement, sell back in the range. I now expect to have an accumulative phase. So I'm waiting. Once this low gets taken, this is the stop rate in which I want to see. This is when I add 2 contracts. Very, very light size. Initially risking, I think I have to go away from, my stop loss was this low, risking around 750. So I entered 2 contracts, risking around 750, and I'm watching to see price show me more validation, right? I'm waiting, accumulating, boom. We come down, have another SMT. From here, we get displacement. I jump in another 2 contracts, and I move my stop to this low. So now my fill is still around here. I now have 4 contracts added with even lower risk now. So now I'm waiting for the displacement through a high, right? Because we haven't had that yet. I'm waiting for the displacement through a high. Move this over here. We come back down. We get displacement up. I add the rest of my position on this breaker block, and I put my stop to this low. So now my risk from this initial entry now gets split in a quarter, and now my fill comes down to here. So now my actual fill and my actual risk on this is around here, and I'm risking only this. So now my risk becomes 6 contracts, 840. So I now tripled my position size. And I only added $100 worth of risk onto this trade. Does that make sense? This is how I pyramid. This is when we talk about pyramiding into a trade, this is what I talk about, right? It's being able to maximize your outcome, maximizing your profit, and minimizing your loss by scaling into a position and continuing to manage risk. So this was one of those trades where this is exactly what I want to see, right? I get to add super small, more risk, more position size. The more conviction I have for the trade, I add to it again, because again, I have more conviction that we're going higher here than I do here, right? Because we just have more structure validating it, right? We've had the SMT, we had displacement, the breaker's still holding. At this point in time, we're looking really, really good. So I take off half here, take the rest off here. Super, super, super nice long in the PM session. Beautiful. Exactly what we expect to see, right? Any questions on this trade? Was this a stop issue or price wasn't ready? Okay. Like I said, the best entry here is this. This is the best entry because this tells you exactly what price wants to do. Most of the time, you shouldn't even worry about what I'm doing here. This takes experience. I wouldn't even try to start doing this. I would focus on just getting this entry because this is exactly what you want to see. You get displacement up, you got a breaker, you got a unicorn, you get the fair value gap, right? This is what you want to see in price. I know you're trying to catch soup, but if you are going to catch soup, it has to be the recent low. So if you are going to take soup entry, it has to be whatever that soup low is, which is here. So this is where you need your stop loss to be. Or wait for the displacement and then enter. I only took a long on that bullish leg since I saw ES still wanted to sweep its equal highs. I also continued seeing bearish imbalances get invalidated. What's your opinion? That was that first move, huh? It's not bad. For me, it's just too early. Just too early. Again, especially after this big move here. After we fucking immediately inverse this entire sell, 160 points, I need this kind of action. I need us to slow down. Because for us to slow down, we won't have another move like this, an expansion move, until we have this, which is accumulation and then manipulation, right? So anytime that we have a move like this, never try to catch a continuation. Never, ever try to catch a continuation until we have another consolidative phase. So for me, I don't like this trade. Stupid question, but yesterday I showed you a trade that I had taken on Friday, and you told me that there hadn't been no buy stop or sell stop that had been taken. I think I understand what you meant, but wanted to ask if you could explain better what you mean by buy stops or sell stops being taken. Liquidity rests in the market at highs and lows, right? When it's at highs, it's buy side liquidity. When it's at lows, it's sell side liquidity. Internal manipulation and stop raids will happen that shows manipulation before an expansion move. So what is that? And I'm looking for here. Here. Most importantly, here. Why is it here? Because this is the point in time where we have an SMT. ES and NQ come down. NQ takes his previous low. ES does not. This is with the divergence, right? This is a divergence. When ES is not, NQ does. This shows that manipulation. What am I thinking here logically? Think about this logically. How do traders behave? Why is liquidity resting there? If I'm a long trader, if I'm in a long, let's say I enter long like right here, right? And let's say this red line dictates my stop loss, and I'm trailing this stop loss. I'm going to trail it to this recent low. All right, price moves higher, retraces, we create a new swing low. I'm going to put my stop loss at this recent low. So, Mark, we know many orders are resting at these recent lows because prices move higher. We expect to move higher. Traders are trailing their stops. There's a lot of liquidity resting at whatever swing low we have. So after an expansion move like this, I need to see some form of raid for me to go higher. Because why? How can markets move higher? Markets only move based off of liquidity. So if there's no liquidity, market won't move. So we accumulate to generate liquidity, generate buy-side liquidity, and sell-side liquidity at these lows before having manipulation move lower, taking the recent low, which then creates an SMT, which shows and approves and gives us conviction that this is now our manipulation move, which we expect. So now what's the next thing I'm looking for? Again, if you're not confident that this is the manipulation move, don't take any trade until this. This is the real validation that this is now the manipulation move, because this is the actual first point in time where we actually get after a stop rate. Notice this move here. You might say, Justin, we got displacement here. There was a breaker. This ended up working out. I still would not have taken this because this recent low was created. This becomes a swing low after a big move here. When we create a swing low after a big move, I expect whatever that swing low is to get rated because we need accumulation. We need to generate liquidity before having another move. So I'm waiting. We run the stops. Again, I notice there's a lack of displacement to go lower. When I'm watching market, I'm looking to see how price is reacting to these levels. Now, I'm not going to immediately take a long right when we touch this, right? Because we could just continue lower here and then maybe move higher after that. So I'm watching to see the reaction. When we come back down and we take these recent lows here and there's no displacement lower and we immediately rebalance into the range, that shows me this becomes the manipulation. And guess what? If I'm still not confident, then I wait for this. And it's just completely, it's always adding more and more conviction. I'm waiting for something. Okay, that first thing happened. I'm still not ready to take a trade. Okay, let me wait for this other thing. Okay, that happened. Now let me let that last thing. All right, all three things have now happened exactly what I wanted to see, and it aligns with my bias, and it aligns with the external draw, and it aligns with what I already expected going into the day. Boom, there we go. That's my A+ setup. Does that make sense? I know we've been talking about this a lot lately, but what are you mainly looking for to be okay with moving your stop to break even? I move my stop to break even when I expect price to no longer revisit that area, or where I don't want price to. If I think if we revisit this area, it invalidates the model, then I will move my stop to break even. So there's two ways I move a stop to break even. If my first price target gets hit, is the main one. If my first price target gets hit, I move my stop to break even. The second one is if we get a point in time which I don't no longer expect price to move lower. For example, if I enter along here and my initial stop is this low, once this fair value gap holds, there is no reason we should go back down here. Why? Because price has rebalanced and mitigated already. We've already had this accumulation. We've already had the stop rate. We've already had an SMT here, and now we've had displacement. This is the show of sign of what we expect to see a distribution move higher. That's our whole edge. That's why we're taking along in the first place. If I'm taking along, my entry should be the exact point in which we should go up, no longer lower. If I am right and I'm doing exactly what I should be doing, there should be no reason why price should go lower or higher based off of how I position myself. And that's how you should be positioning yourself. And that takes experience to be able. It's all about timing, right? Waiting for price and time to align. But once I enter here, we could still dig a little deeper, maybe tap a little lower into the fair value gap. But once we get here and we get back above this fair value gap and we start to continue higher, I can move my stop to break even because I know there's no reason for us to go back down here. Because we've already done everything we needed to do. We've displaced out of this fair value gap. Now, this is when I expect expansion. Does that make sense? I entered on ES. What made you enter on NQ was I liked NQ. I didn't like ES structure. You want to see what ES structure looked like at this time? It was fucking terrible, in my opinion. It was just slow. This is what the 5-minute looked like on ES. I just don't like it. Why didn't you take off something off at consequent encroachment of the wick on the first trade? Not saying you should have, just curious. And if no, when should you take something off at consequent encroachment of the wick? It's all context. There's no reason why consequent encroachment should hold there. What wick are you talking about? Is there like a wick on the 5-minute or something? This wick right here? There's no reason this should hold. Because again, the model, we know we're going here. Don't overcomplicate it. Don't look at this. Don't look at this. Stop. You're trying to find things. You're trying to find things that have no conclusion or correlation at all to what we're looking at. We expect this low to get ran already. So why would consequent encroachment hold here? We're in a bearish model. This is where we expect to go in price. Why are you focused on a wick in here? Consequent encroachment only will hold if there's a reason for price to hold. Why is there no reason for price to hold here? Buy side has been swept. We've had manipulation. We've displaced back inside the range. Retraced back to OTE. Fair value gap gets held. Displacement back down. This is where we expect to immediately dump. Why would I expect this to hold here? It has no correlation to where we are in the model. Consequent encroachment is something you mark if it has correlation to an already existing place in which we expect to stop. That's it. And again, it just takes time and experience to watch it happen. It can be easy to just overcomplicate it. Again, that's what I'm saying. Your foundation should just be market maker models right now. Find the drawn liquidity, recognize the model, trade it. Don't focus on anything else until you can start building conviction with that. Because you're just going to end up going back and forth. Oh, this tells me I'm bearish. This tells me I'm bullish. This tells me I should be bearish. When in reality, it's not. You're just overcomplicating it. You're just looking for too many things. If you took a long in that fair value gap, why didn't price hold that fair value gap? Didn't the body close below it? Brother, this whole area is an imbalance. So no. Is the setup technically invalidated when it disrespects the fair value gap? 5 minute. In this specific model, the model is invalidated. Oh, sorry. Early in the short, this bearish model is invalidated if this 5 minute gets ran through and a candle closes above. It never did. You consider an SMT where an example of a swing low on NQ is sweep, but on ES makes equal highs? Great question. Yes and no. If we have equal lows, I most likely won't take it. So it might be an SMT, but I won't take it because of the equal lows. I want it to be clear. Because equal lows is where liquidity will be resting. So it just goes against why I would be expecting that to be an SMT. I'm confused. Is this trade you took on NQ, is that to you A+ or just a good trade? There are some things I would have passed on because I feel like it's too late to join. So I'm noticing that in premium, we just sat at 1238 high with the 1:14 p.m. sweep on 2-minute chart. So it's hard to still go long in that area after noticing that sweep. Same like trying to go short after sell side was swept versus being left untouched. Thoughts? This move, again, you're too zoomed in, brother. This is not buy side being swept. This has nothing to do with the bigger time frame model. This is where buy side is resting. What does this become on the lower time frame? This becomes the start of an accumulative phase. We rebalance price lower, create a swing low, create a swing high, retrace back higher, take the swing high before selling back off, taking the swing low. We now accumulate. What are we doing here? This becomes generated buy side. This becomes generated buy side before displacing up, starting distribution, take the pullback, breaker, targeting the external draw. You're too zoomed in. This means nothing. This is no trade. You just wait. You just let this let this play out. This doesn't tell me anything. If I enter on the unicorn and I put my SL at the low, you're talking about my RR on that first buy side will be less than 2. How can I make the trade give me a better RR while taking partials at the first buy side liquidity? If you took this long on the breaker. So you put your stop down here. Let's say you enter here, right? Let's say you take half off here. Let's say you take half off here. So this gets split in half, right? 2.4. What the fuck are you upset about? Guys, I don't think you guys realize that you just need confidence. RR, many of you guys don't have an RR problem. Now, you might have a risk problem. You might have a risk problem. But when you have confidence, I don't care if you're trading 1-to-1. I know traders that trade 1-to-1 and are insanely profitable. You want to know why? Because those trades that they take 1-to-1 are high confident A+ setups. So I don't give a fuck what your risk is as long as it's 1-to-1, and it should be probably more than that. Because the way that I teach and the way I position yourself and the way that our model positions yourself, most of the time it should be at least 1-to-2. But it doesn't matter. Because if you're taking high quality setups, your risk, if it is defined correctly, and you are taking A+ setups, it doesn't matter if your risk is low. Your win rate will outperform it. So your risk is just an extra cushion to protect yourself from losses. So you don't need to be targeting 1-to-5, 1-to-4, 1-to-3, because guess what? The more that you increase your RR and you try to catch bigger RR moves, the less profitable you will be. Why do you think that? The less profitable you will be when you try to catch 1-to-5, 1-to-6 moves. The reason is because you are positioning yourself in a market in which the market is showing you exactly where the market will go. The reason we take a long here is because we know we go to this area. The only point in time in which we have the confidence to enter a position to do so in which we go here is here. There's no reason I should be targeting higher. There's no reason I should be entering lower. This is the position in which I enter myself in. I know the market goes here. Should I be trying to catch bigger? No. I'm taking what the market is confident in which I know I'm confident in. So when you're trying to catch bigger moves, you're positioning yourself in points in time which you're trying to catch highs, you're trying to catch lows, you're trying to catch big moves because you're afraid of losing and you want to catch massive massive moves. You do not need to catch massive moves. You need a fucking sliver of the pie to be a fucking millionaire. So it all depends on who you are as a trader. Some of you might have risk to reward problems. Some of you might not. Many of you, in my opinion, you probably don't. All that the problem is just your positioning, your entries, which come with fine-tuning. Again, I want you guys to look at this. I want you guys to really take a look at this. If I was not a trader, and if I was to look at this, and I was just a normal person, and I was to look at this chart and to be like, let me see. Oh, what would have been a really good trade here? Oh, this guy caught this move right here. This is fucking nothing. This is nothing. We just had a massive 200 point dump and 200 point pump, but this guy caught like nothing. Oh my God, this guy's a joke. This guy's a joke. That's what most people want you to think. That's what most people in the space will advertise. They'll advertise, oh, we just caught a 300 point move, 1,000% option return, blah, 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 which promotes bad habits, which 9 out of 10 times they are not catching that move. They are losing and not telling you. So you do not need big moves. You just need this. In fact, you don't even need this. You could have a fucking quarter of this. You could have a goddamn fucking sliver of this. It doesn't matter. It matters about confidence. If you're confident with catching 5 points, brother, you're going to be fucking rich. Do you guys understand? It has nothing to do with the move. It has to do with how confident you are in and where the market's going and when, and able to position yourself. ICT always says, if you can catch 5 points consistently, you will be rich. 5 points. That's all you need, 5 fucking points. Don't try to catch massive moves. Focus on what the market is telling you it's going to be going to. Focus on where the market is positioning you to enter. What's great about our model is it'll tell you exactly when you should be fucking entering. Wait for everything to align. You need a goddamn sliver. Guess what? What's great about trading as well? You can infinitely fucking leverage this game. Somebody could make fucking $100 catching a 100-point move, and somebody could make $1 million catching a fucking 5-point move. Which one do you think's better? Neither. It just depends. But I want to make sure you guys know it has nothing to do with moves. It has nothing to do with anything except for confidence in the market. Where are you confident in where you're entering, and are you confident in where the fucking market is going? That is all it is. Doesn't matter if it's 5 points, 10 points, 100 points. It's about confidence. And you shouldn't be looking for anything else except for things that you are confident in. And when you're not confident in it, you lower your size and you build conviction. You're not focused on making money. You're focusing on building the conviction to be able to trade it consistently and have the confidence. You want to focus on building the confidence if you don't have it. Would this order block be used as good conviction for the same trade? Yes, it will. I struggle a lot with taking too much off at low-hanging fruit. Not sure how to be able to hold to better scaling points. Constantly taking profits ridiculously short, as in 10 points on NQ, when my real target should have closer to be 25 to 50 points. Again, the answer to this is right in front of your eyes. You know what the answer is. If you have a struggle taking off profits at low-hanging fruit, take off lower profits. If you normally take 80% off or whatever you think is too much, take off 40%, take off 30%, let the rest go. And start to see how it impacts your trading. If you're entering trades off of the 5-minute, how far do you look out in bigger time frames? Like you wouldn't base that trade off of... Wait, if you're entering trades off of a 5-minute, how far do you look out in the bigger time frames? Like, wouldn't you base that trade off of what the 4-hour chart looked like for you? Okay, great question. It's all fractal. Justin, what do you mean by this? We've talked about this before. It is always different. It's always different depending on what you're looking at. And this, in my opinion, takes experience to recognize. Every single thing in which you look at on a chart will be the exact same thing. I could tell you that this is a 5-minute time frame. I could tell you this is a 4-hour. I could tell you this is a 1-hour. This is the exact same thing. You don't know what time frame this is. Guess what? Because price is completely fractal. It's the same thing on every single time frame. And models will repeat on every single time frame. So, Justin, what time frame do I use to enter a trade? Any. Now, your question is, Justin, when you're looking at a 5-minute, do you look at the 4-hour? Great question. I look at every single time frame which has a model. Which means if I go into a day and I'm looking at a 4-hour, and I can say, hey, my 4-hour time frame is super, super bullish, right? Let's say I wake up. Guys, we're looking at the chart going into the day. My 4-hour time frame is very bullish, right? I have a bullish bias going into the day because the bigger time frame is most likely bullish. Right? Let's say it's something like this, right? It doesn't have to be super clean, right? Sell side down here, we got displacement, right? We have equal highs, whatever, right? This is giving me a good enough understanding that price is most likely pretty bullish here, right? Okay. So my 4 hours bullish. Now what? Okay, well, let me zoom in even more here. Let me see what else is going on. So now let me go into the 1 hour, right? So now let me draw some more structure. Let's say the 1 hour looks something like this. Okay, I got some more understanding of what's going on now. Okay, now I can, guess what? Look for the exact same thing in price. Let me look for a model now. Okay, wow, the 1 hour looks pretty bullish right now. Why am I bullish here, right? Number one, this recent low just got taken. So sell side has been taken. This could now be, again, where I am expecting to see manipulation, where I'm expecting to see a manipulation move. This becomes my buy side level, and all of this becomes generated buy side, right? We're generating buy side on the way down, which is why we're expanding and rebalancing. Again, what are the 3 reasons why markets move? We hunt liquidity, rebalance inefficiencies, rebalance equilibrium. What are we doing on this move here? Not only are we generating buy side on the lower time frame, we're rebalancing the equilibrium on the bigger time frame, we're rebalancing to the inefficiency on the bigger time frame, and we're about to go hunt liquidity on the bigger time frame. Every single fucking thing is going to align. When you start clicking and when you start, you guys wonder how, like, I sound like a fucking maniac when I talk about this shit. It's because I feel like a goddamn timekeeper. I finally found time travel, and nobody believes me, right? I'm that confident with what our concepts are that I sound fucking insane when I talk about it. All of this generated buy side. What am I looking for now? We're at a point in time which I expect to see manipulation. So now, all right, my 4 hours bullish, my 1 hour is bullish. What do I need to see happen in price for me to take a trade now? I am not looking to take a long down here, most likely. I am waiting for this. Right now, the 1 hour has shown me exactly what I need to see. Why? Sell side taken, rejection of the bigger time frame imbalance, market structure shift to the upside, displacement. Now, what am I looking for? Okay, now I zoom in even fucking more. Guess what? What do you think I'm looking for here? The exact same fucking thing. We now have another previous range. Another previous range. Guess what I'm looking for? Oh my God, I'm on the 15-minute now. What are we doing? Generating buy side to the downside, retracing the equilibrium, manipulation in the imbalance before expanding in the bigger model. The exact same fucking thing on every single time frame. Zoomed in, zoomed in, zoomed in, zoomed in. The exact same fucking thing. Zoom out. Literally this entire thing of what we're looking at. Repeated over and over and over again. This is how you can recognize when time and price aligns. The market is models inside of models inside of models. You wonder how I have good risk? This is why. Because I wait for every single thing in price to align. The bigger time frame, the lower time frame, the medium time frame, every single thing in price I need to see align in favor of a reason why we should only go one place. There shouldn't be anything in favor of against my bias. Everything should be aligned. Does this make sense? For the people who are new to this community, your brain probably just got exploded right there. By bigger time frame, do you mean 1 hour or 15-minute? Bigger time frame only has correlation to whatever I'm talking about. Bigger time frame and lower time frame is Why am I forgetting the word? Why am I forgetting the word? No, it's not fractal. It depends on the context. It depends of the context. If I'm looking at a 5-minute, a bigger time frame could be a 15-minute. If I'm looking at a 15-minute, a lower time frame will be a 5-minute. Relative, sorry. No, not relative. No. Subjective. It's subjective. Sorry. I don't know why the fuck I just brain fart right there. It's subjective. Feel like recently the PM setups have been much higher quality than AM, but PM for me is like a 4 AM. Should I ruin my sleep schedule, or what are your thoughts? That's up to you, brother. That is primarily up to you. I would not use ICT concepts in stocks because most of the time they're not very liquid. All right, let's talk about what we're looking at going into tomorrow. Clear this up a little bit. So, bigger time frame, still super bullish. The 4-hour fair value gap, it's actually holding so nicely. 4-hour wicked all the way back down, taps the recent imbalance, continuing to hold this 4-hour. Honestly, I wouldn't be surprised if we run in the overnight session all the way to this high. I really would not be surprised if we run all the way to the highs in the overnight session. I'm hoping we don't. Because then we can get better opportunity going into tomorrow. But if we end up waking up tomorrow and we have run to this high, I'm going to be very patient going into the morning. Because most of the time after this expansion move, after buy side's taken, we're either just going to consolidate or maybe have a continuation, but I need more structure to validate what we do. If I wake up tomorrow and we're still in this range, I want to see us honestly put a high on something like this, accumulate like this, come down here, and then look for market to open to then have that move, right? Because then we have these stacked lows here. We could have a rebalance, take sell side, have generated buy side here, and it's just going to become way higher probability, way better of a setup, right? If we end up getting up here, I wouldn't really want to touch anything until we have more structure. So it's all really going to depend on what happens in the overnight session. So my bias going into tomorrow, very bullish. Hopefully we don't pump in the overnight session. The gray box is the 4-hour fair value gap. ES is going to be the exact same bias. I'm bullish. Again, I would want to see this become generated sell side. So this will become generated sell side, which I eventually expect to get ran. Not right now. I mean, I would hope not right now. In relation to what we expect in the model, I don't expect it to be. So I would expect this to be another move higher. This becomes generated sell side to continue higher to the draw. And actually, this will become a breaker on the bigger time frame. If we can get 3 here on ES, this will be really nice, actually, because we have this really nice breaker here. Pull back, boom. And I'll be watching this. Justin, I have a question. I've been struggling with what I look for in the charts and wanted to know if this is what we should be looking for. Basically, when we swipe liquidity, we shouldn't enter a trade until price has created low resistance liquidity with manipulation, right? And then wait for an SMT with displacement and fair value gap. Yes, that's exactly correct. Fair value gaps are valid if it's in relationship to where price is at the time. So yes, something from last week can absolutely be valid. I put this 15-minute fair value gap in here, right? This still has relationship to price because guess what? We're still in this, right? Like this has relationship to where we are in price. So this still matters. But guess what? Like shit down here doesn't matter because we're nowhere near it. There's no news tomorrow, I don't think. Yeah, we don't have any news tomorrow. It's actually wild how you pretty much peeled my eyes back and cured my market blindness over these last months. Crazy how much more knowledge I am about the markets, even though it hasn't directly correlated to profits. Just being able to be confident in the draw and liquidity is actually pretty mind blowing to think I'd be able to do when I was starting out 7 months ago. And now knowing my psychology is the only thing holding me back from profitability. Genuinely never felt possible to get to this point. Hey, much love, Diego. That means a lot, brother. You're on the verge, brother. Trust me. Keep it up, bro. Why leave the 4-hour fair value gap on the chart when it already got disrespected? Which 4-hour? This get disrespected, brother. What do you mean disrespected? You see this massive wick right here? We're still in this 4-hour fair value gap. What do you mean? Some of you guys choose to focus on the most least important things. When you see that hourly fair value gap get violated, do you expect to go to sell side? Yes, but the reason I still wouldn't touch this though is because, again, straight up move, straight down move. I don't trust this. It will never look like this most of the time. So why do you expect this? Again, most of you guys look at the chart and think that something happens knowing that it would most likely probably not happen, and you haven't seen it happen ever again before. Like, some of you guys go into the market expecting some crazy fucking thing that you know most likely won't happen, but you still end up positioning yourself in it just because you think that you're seeing that that's what it is. That's a problem, is you guys aren't actively using your past experience when you're trading. Like, use your past experience. Actively, like, sit there and fucking think about, have I seen this before? Does this look clear? You'll get to a point when you have market experience when you'll know, I've seen this 1,000 times. I've seen this 100 times. Like, I know this is exactly what I'm looking for. If it's not that, don't touch it. It's that simple. Probably Clay. I would withdraw it and say put it into fundeds, yeah. Fully agree. The more you gain confidence in one setup, the less you want to touch anything else. Absolutely. Because you start to see what consistency can actually bring. You start to see how powerful one setup is. Many people get overwhelmed or like overexcited about the idea of, trading when they first start and making money and all these things, and they're like trading all over the place, constantly looking for new things, new ideas, stuff like that, because there's always opportunity. I can make money every single day, every second of the day. You get to a point when you realize that one setup is the gold mine. One setup is all you need and all you should need. Would you always enter in the first fair value gap instead of the bottom? Are you talking about this trade? This fair value gap instead of this fair value gap? Yes. Yeah, I enter here because of the breaker. So yes, most of the time, yeah. So the 11 a.m. candle on NQ on Friday, would you count that wick or just pay attention to the body when it comes to that fair value gap being filled? 11 a.m. candle on what time frame? $15-minute? Wait, what is the question? 11 a.m. candle on NQ Friday. Would you count that wick or just pay attention to the body when it comes to what wick? This wick? Brother, this wick has no substance. I'm confused on the question. What wick? This doesn't mean anything. It's just a candle. We just tapped the 15-minute fair value gap. Like, when you ask that question, what's the question like you're trying to get out of this? Oh, am I dumb? Is this not the right area? Oh, February 2nd. Oh, shit. I got to go back. Hold on. February 2nd, 11 a.m. This wick. Okay. Yeah, this doesn't mean anything. This fair value gap still holds. Again, the wicks do the damage. The bodies show the narrative. Okay? I don't care if as long as we close above this move means nothing. The wicks do the damage. The bodies show the narrative. Yeah, and again, lower time frame, that's an entry. Let's zoom in here. 15-minute fair value gap. What am I looking for? Recognize the buy model. Displacement, this fair value gap gets ran through. There's multiple entries that you could take here. Once this fair value gap gets ran through, you can just take it as an inverse. Right here. Boop, tap, long. Again, what does this also look like to you? Oh my God, this is a buy model. Oh my God. What does this become? What does all this become, guys? Generated buy side. Whoa, crazy. You'll see this shit everywhere. You'll see this everywhere you look if you're looking for it. All right, guys. That is all I have for you guys tonight. Hopefully you enjoyed the session as much as I did. You know, you guys know I love getting fired up and I love yelling about things. But the way you're explaining it sounds like you're mad. I know. It's so fun. I love it. All right, guys. Enjoy the rest of your night. Get some rest. I will see you all tomorrow morning. Peace out, guys.